Good morning, everybody. It's Tuesday, November 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 3 at 433. January soybeans were down 2 at 10.20 and a quarter. And December Chicago wheat was up a penny and a quarter at 566 3/4. This morning, the USDA announced an export sales announcement of 110,500 corn to Mexico for 24. Also, we got a Brazil planting update. Their soybean crop 67% planted. That's versus 54% last week and 61% for a year ago. Corn crop 72% planted. That's up from 59% last week and still just a little bit behind where they were a year ago at 76%. Good morning, guys. Hope everybody's doing well. Dustin, maybe a few thoughts here as we've kick off the morning, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, we got a couple of things happening here at once. The dollar index continues to push higher. So we are, we're up at multi-month highs again in that dollar contract. And, at the same time, we continue to see tremendous demand in the front end. So what I think might be happening here is you're getting, the flat price is having a hard time moving higher because of the currency strength. Yet we have a ton of demand. And so you're trying to get producers incentivized to move grain, and they're trying to do that through incentivizing through spreads, right? Reducing the carry in the market. At least that's what I think is happening at the moment. But it's a very positive sign to see strong basis and strong spreads. That's one of the better things to kind of watch for direction. So perhaps this is the breakthrough that we'll get to see. Maybe the D's contract will break this glass ceiling, the mid 430s, and see where we can go to.
Ben, what's on your mind this morning?
Just kind of looking at this rally in the currencies, and I think we've taken ourselves out of being the cheapest corn in the world here on this bounce. To see over the next week or two what how much of this demand was potentially front loaded, and then you get into kind of a precarious situation the last 2 weeks of November with options expiration. And then ultimately headed into first notice day, that we could have everybody sort of looking at each other being long, and wherever that price comes from, whether it's here or higher or lower, that's when the rubber hits the road. So technically corn looks great, and it is very resilient on breaks and has been bought. So we'll see how the next couple of weeks play out.
Yeah, that Jason brought up a good point this morning. I mean, we got money zipping around through these markets, seeing Bitcoin last evening over 90,000, just crazy movements going on in all of these markets. Dustin, we talked about that big option trade at that 90,000 strike, and like a day and a half later, it's crazy how they go right there, so interesting stuff. What else is on our mind, guys? In terms of the grain markets here this morning, wheat just a little bit higher this morning after a real ugly day yesterday. Ben, maybe a few thoughts on the wheat market?
I think the wheat market got hit with, a few things over the weekend. Decent rains certainly help winter wheat. Then you see some ramblings of potential peace coming in Russia and Ukraine. And at the same time, the dollar shot higher. So I think it kind of got a trifecta. Interestingly enough, it kind of pushed down through its lower support, but managed to settle back over it. Maybe it's a flush of people who had been long it, and it's going to recover and start to work higher again. But I think it got hit with all three of those things over the weekend, and just saw a pretty big risk off situation. And you're looking at wheat corn now at $1.30. That's pretty cheap when you're looking at the underlying fundamentals of those two markets.
Very good. Dustin, you've referenced the back end of these markets quite a bit, and we're still, even with the strength in, we'll call it old crop contracts, the 25 stuff, still not overly exciting for growers. I mean, it's still kind of in a holding pattern as to what they should be doing for next year,
Yeah. For our subscribers, I wrote kind of extensively on this last night on just, looking at like what an accumulator looks like, because that's a lot of questions we've had. And I would definitely encourage you to go read that. Just kind of going through just some of the scenarios seem very, very appealing. At least that's what we seem to be gathering from our customer base at first glance. It's like, should I be doing this? Should I be trying to get a premium out of the market to try to get me up toward break even? Let's say a grower has a break even though somewhere in the high fours. Let's say it's 480 a bushel at APH. Accumulators could get, kind of box you into a bad spot if this is just the kind of the start of what appears to be pretty good demand, and we end up kind of trading towards that level. That's where we probably need to have a lot of powder dry and ready to sell. But if we are kind of stuck with a double up potential early on in the season, we're afraid that that's going to actually prevent us from being able to make the moves that we need to make to reduce risk at that point in time. I'm not saying that it doesn't work out. I mean, accumulators, it could work out very well. Markets could stay sideways through that whole time frame. But when we look out forward and think about how low volatility is for DS25 corn and all those time frames between now and DS25, and then wonder what's going to happen. And, nobody knows how this U.S.-China negotiations are going to go in. I think there's a lot of things that could happen in either direction, right? We might go into a big trade war and prices collapse, and accumulators don't really protect risk in those situations. If they don't have a guarantee, it's going to result in a knockout without much sold. And conversely, if all of a sudden China responds how they did last time, 2020, 2021, and there's a huge bid behind the market, we might be way through that double up period early on in the season. So accumulators are not about protecting risk. They're about trying to get a premium in exchange for uncertainty. And, there's a time and a place for that. I think, it's my personal opinion that I don't want to close off the year, somewhere near break even on a small portion of production with an accumulator, only to find out that there could be major changes that come up in the next 6 months.
That's good stuff. And as always, I mean, anybody that wants to visit about how some of those tools or products work for your individual operation, give us a shout. We'll be more than happy to discuss that with you. Ryland, real quick here, quiet start to the week for cattle and hogs. What are your thoughts this morning?
Yeah, kind of an uninspired trade yesterday in cattle. It just seems like everybody's wondering what direction cash is going to be this week. And, you had beef start off a little bit firmer. Choice was up 28, select up 265 last night. So just kind of feels like we're a little bit choppy. We're still in the midst of a little bit of a roll here. So I still think we have some of that volatility, just money kind of moving around. But overall, we're expecting a little bit of a lighter slaughter this week. And overall, it just seems like, cash tends to kind of stay, I'd say, steady, if not a little bit weak, just over the next several weeks. So overall, it just kind of seems like there's a wait and see going on right now in the cattle. At this point, hogs, managed money, still carrying massive long positions. We did get a little bit of a bounce back yesterday. Maybe we're seeing some profit taking or a little bit of short covering here yesterday, but cash was up $1.85. I think most of the eyes right now are on cutout, and we're still going to be watching the weekly export report at this point to see if we're going to see a little bit of an uptick in that kind of business. But yeah, overall, I think that, all eyes are on the bellies right now, down another $11.18. And at this point, managed money is still huge longs, record longs, and we're still in the midst of the roll. So it still just feels like waiting for them to kind of clean up, moving their positions from D's to Feb right now. So overall, just kind of watching the carcass, seeing if there's going to be any kind of anomalous trade there. But it feels like the managed money carrying this record long at this point is kind of a headwind and could be a problem later on down the road. So it just makes sense to stay pretty well protected at this stage of the game.
All right, perfect. Appreciate the update there. A couple of things to point out. Export inspections will be out at 10 o'clock this morning. Again, those were pushed back a day due to yesterday's Veterans Day holiday. We also have crop progress and conditions out at 3 o'clock. So we'll take a look there, visit about that tomorrow morning in the war room. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything AgYield. And we certainly appreciate everybody that tunes in and supports the show. We are doing this live every morning that the markets are open, 8:15 Central Time. Streaming live on X, Facebook Live, and YouTube Live. So we hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.